Welcome back, investors, to Ticker Time News. I'm Adam. I hope you had a wonderful weekend and a first day of trading. Now, last week, large cap and mid cap indices, they all closed above their prior week's highs. That's a good thing. But small caps, they did not achieve that momentous move. This suggests that there is still further upside potential in the broader market as it moves counter trend to the recent 2-month downtrend off their August highs. And the August highs, let me get my highlighter here, would be the top of the summer rally. We have been in a 2-month trend moving down, and now since reaching an intraday low on Thursday, October 13th of 34.91, we have started a counter trend moving up, making higher highs and higher lows. Now, this is common in a bear market. You always get higher highs and you can get runs of 20% or more sometimes in a bear market. I mean, our summer run was a pretty substantial move in an overall bear market. We still made a lower high when we reached the peak of the summer rally on about August 17th, right there or so. But now we have this trend line, and this is critical. This blue line running right here. This is the current counter trend line for our rally that we are into right now. Now, like I said on Friday, one big green day does not mean we are in a rally. We need follow through. Today we got follow through. That is good. However, it is a bit stretched at the moment, meaning if we have some bad earnings, because this week, this is the busiest week of earnings out of the entire earnings season. There are a lot of companies reporting, and even some big caps, like we've got Microsoft and Google coming up tomorrow, right? So this week, there is also no Fed speak. The Fed is quiet this week. Why? Because they're about to enter the FOMC meeting on the 1st and 2nd of November. That will be critical. So, week prior, they are quiet, they are silent. They will not be out in the public affecting the market. So, what's out there to affect the markets this week? All of those earnings. If those earnings are decent, if they're good, that will help this rally that we seem to find ourselves in. If they are not, like Snap, then this rally will snap. Yeah. Okay, so when I said that this is a little far removed right now, let me open this chart up just a little bit more here. Give me a quick second to zoom in on the candles for today. This is the daily chart, so each candle represents one day, but I want to show you how we're a bit extended right now. Today, and I'll go into the 15-minute time frame in just a moment, but today's candle, right? It's a nice sized candle. We had a gap up at the open and we rallied and we got right up to this 3,800 area, and there's going to be resistance there. And I'm going to talk about our next target to beware of because it's around that 3,800 to 3,820 like zone. We have to be cautious there. And that could be an area that is the next resistance zone that maybe causes this rally to stall. And when I say we're disconnected, that 5-day EMA, I always talk about it because it's so darn important. Right now, that 5-day EMA, it came through like this, and now it's starting to move up like this. Well, today's candle is not connected to the 5-day EMA. And remember, think of the 5-day EMA as like a circuit board, right? The candles have to stay connected to that 5-day EMA. Even if it's just the wick of the candle that touches it, it's got to stay connected. Otherwise, the circuit fails and the market will stall or the indice will pull back. So right now, we are a little bit off of this trend line right here, and we're disconnected. So we could see a couple days of sideways movement or maybe a pullback tomorrow. Those are all possible, but we'll talk about it. Let's go into greater detail here. Let's go into the 15-minute time frame, and let's talk about today just real quick. Just a couple things to note about today. All right. Let's open this up. Oh, first thing I want to point out is I want to go back here just a little bit on this 15-minute time frame. It's going to get there. There's going to be a lot of candles there, but you'll see what I'm talking about here. If I were to take this all the way back to the beginning of October, right? And let's just put a box here real quick. I'll take it off as soon as I put it there. Okay, if I were to put a box, right, for October, I didn't quite capture the top there. But if I put a box here like this, where have we gone all month? For the month of October, what have we accomplished? We've been in this trading chop box. That's what I'm going to call it, a chop box for the entire month of October. We've done nothing but chop around in this box. That's important to note, okay? As we are trying to now break above this box and break out of it with our current rally. If we look at the top of the box, and let me get the highlighter out here to point it out to you, we've got this high. This is the October high right there. And look at where we are right now. We're matching it, right? Maybe just a little bit above it on today's move, but we're right there at the same point. Can we continue and move higher than the October high that we have so far? Or is this going to be it? And this is as far as the rally is going to go, because, you know, starting from down here, going to where we are now up top, that's been a pretty nice rally that we've been in. All right, let me clean up the chart here real quick. Take those off, and I'm going to take this box off, and I'll zoom in on today. Almost there, and it's gone. All right, let's zoom in on today. All right, today, the stock market, it did get some pretty nice gains into it. Let me open this up a little bit more. I'm going to have Friday and Monday today on the chart. So you can see that Friday's action and Friday's momentum, it really carried over into today. There was a little bit of selling into strength first thing this morning right there. Well, the marker, come on, highlighter, right here. Yeah, a little bit of selling into strength first thing this morning, but then we caught support. And where did that support line up with? Friday's close, okay? That's very important that we are able to hold support at Friday's high, okay? And build off of that for the rest of the day. Now, the day did start on a mixed note with that little bit of selling into strength that I just showed you on this 15-minute time frame. With the major indices, they were oscillating around the flat line. Why? Because the 10-year Treasury, well, it tested 4.3%. Selling then quickly subsided in the Treasury market, and stocks, well, they built upside momentum. The S&P 500, which did slip below 3,500 on October 13th. So if I squish up the chart here, again, on the 15-minute time frame, that's where that blue trend line starts, okay? That's October 13th. That's where this counter trend rally started. Now, it briefly tested the 3,800 mark today before closing the day just below that level at 37.97. The S&P 500 did tag 38.10 today, but that early October high of 38.20 is the next target. Okay, here's Friday and Monday. Where we reached our high was right here, right before the close today. And we got to 38.10. But that October 13th high is at 38.20. Our next target to watch. It's imperative. If you are bullish on this counter trend rally, right, this bear market bounce, then you need buyers to step in and overcome this 3800 to 3820 resistance area to spark an even larger rally for Q4. Of course, now, don't get me wrong, there are a lot of moving parts to monitor, from earnings reactions, the midterm election results, geopolitical strife, etc. That won't likely make it a straight line to the upside, like Friday and today. The game plan is to expect more of a, let's call it, 2 steps forward and 1 step back. That's what price action will likely be. The VIX, let me go back to the daily chart here. And we do have some things to talk about still on this chart, but I want to go and pull up the VIX real quick. This is all important information in this market. So the ticker symbol VIX for the VIX, and you want the CBOE, which on TradingView is your second option. Click it. We're on the daily view again, so each candle represents 1 day. Now, you can see here on the chart, the VIX, it peaked on October the 12th, and it has been trending down. October 13th, remember, was the low on the S&P 500. So the VIX has peaked there, and it's in a downtrend now. Today it closed below 30, but still pretty much at it at 29.85. But the VIX has been gradually pulling back off that September-October high. But it continues to remain elevated on a historical basis around this 30 level. So risk management, capital preservation remains critical for your portfolio. Now, there are also plenty of macro forces to keep you worried, right? And that's why I titled this video about climbing the wall of worry. Those macro forces at hand you need to keep an eye on, and we will. But mainly, the US dollar and interest rates have had significant inverse effects on equities throughout the year. Let me pull the dollar up here on the chart so you can see that. It's been very important to how this market moves. Last Friday's selling pressures in these two assets, the dollar and the 10-year, opens the door for equities to stage a follow-through, which it did today. Now we need this follow-through to bring enough momentum to break the 3,800 to 3,820 resistance zone for the S&P 500. And I'll show you the zones for the SPY, the Qs, and the IWM. Now, whether or not that zone can be broken remains to be seen. But there is an opportunity developing for bulls to retain control off the October lows for a good-sized rally in Q4. Now, there are more than enough my goodness. There are more than enough headlines to say otherwise. However, the key to figuring out if the market has already discounted those concerns so it can now move forward and climb that, quote, wall of worry. Okay, looking at the dollar, it has pretty much been flat to a very slight decline. If I put a trend line on here like so, you can see that slight decline. But if I also put a trend line down here on the bottom, it is not a confirmed trend line on the bottom just yet. The bottom line only has 2 candles connected. How many candles do you need for it to be a confirmed trend line? 3 or more. Now, tomorrow for the dollar, here's what's being priced in as risk for the dollar. Right now, the dollar could reach a high of 114 or a low of 110. So this yellow shaded box right here, it is showing you the risk level for the dollar. 110 as the low and 114 as the potential high for tomorrow. Right now, there is a 2% move to the upside versus a 0.93% to the downside. So with those probabilities and with that percentage, 2% move possible to the upside versus a 0.3%, 0.93% move to the downside leads me to believe the dollar could have a decent day tomorrow. That's what it's telling me. Okay. And I've got the exact same things to show you for the SPY, the Qs, and the IWM. All right, let's keep going. Now, let's shift focus back to today's market. The 10-year, let me pull that up. US 10Y. That's on TradingView, by the way. And if you do not have TradingView, there is a link in the description to TradingView. It doesn't cost anything. You can sign up. They have a free account to use. Now, here's the 10-year. It's been on a tear. This is a daily candle view of it, and you can see that it has just been strong. It is currently in after hours, basically flat from where it closed today. But the 10-year ultimately settled 2 basis points higher on the day to 4.23%. And again, in the after hours, just slightly above that. Now, it is above that resistance line that we hoped could hold it back, but it didn't. The 10-year broke through. It stayed connected to that 5-day EMA today. So the 10-year, if the dollar has some strength tomorrow, the 10-year may likely have some strength tomorrow too. Now, its new high that it set just 2 sessions ago, on Friday, I believe it was, intraday was 4.34%. So we got to keep an eye on that number as potential resistance for the 10-year. Now, for the 2-year, it's US02Y. Now, the 2-year, it actually fell 3 basis points to 4.48%. So we still have an inverted yield curve, but the one thing nice about the 2-year is this pullback today. Let me get that highlighter out of here. That pullback today allowed it to get back under this trend line right there. That hopefully can continue to act as a resistance point for the 2-year. Now, notably, the stock market held up pretty well, even as the 10-year did reach its session high. Market participants remained, what could I say? They remained thinking that a Fed slowdown, okay? Because remember, we've been talking about this, and I'll show it here with the Fed Watch tool. CME Fed Watch tool. First link right there for Google. When you type it in, CME Fed Watch tool. There's been a dramatic change. in the Fed Watch tool. And it's all because last Friday's live stream, we talked about the Washington Post article that came out. It shook up the market, and it is what kicked off the rally on Friday that bled into today. So let's look at this. I want to show you what's changed dramatically here. All right. For the November 2nd, when the Fed comes out and they're going to raise rates, there is a 95.5% probability of a 75 basis point rate hike. It is baked into the cake right now. Now, here's the interesting part. When I go to December 14th, which is the next meeting for the Fed, okay? This bar all the way to the right of your screen, this bar used to be much, much higher, okay? Much, much higher. Let me scroll down just a little bit here to give you the percentage point. Let's see. Last week, all right? Last week, this bar all the way to the right on your screen was at a 65% probability. It is now down to a 54.9% probability of a 75 basis point rate hike in December. What's curious, though, is as that probability fell, the probability of a 50 basis point rate hike increased. Today, it stands at 43.1% probability of a 50 basis point rate hike. 1 week ago, it was at 33.6%. So you can see the change that has occurred in the market's thinking for the December meeting. All right, this is important to know. Again, CME Fed Watch tool into Google, and you can look at it too. Hopefully that is helping to keep a lid on where the 2-year goes. Because remember, the 2-year is more sensitive to the Fed funds rate. Now, market participants, they remain drawn to the notion that the Fed could take a less aggressive rate hike approach in the December meeting and beyond. Now, one thing to be clear on, I said it during Friday's live stream, I'll say it again today. A Fed slowdown is not a Fed pivot. Okay? Don't let the articles or the internet trick you into thinking otherwise. A Fed slowdown is when they're going rapidly at 75 basis point rate hike, another 75 basis point rate hike, another, and then they go to a 50. That's a slowdown. A pause is when they do a rate hike, a rate hike, a rate hike, and then no rate hike. They leave it the same. They do nothing to it. That's a Fed pause. A Fed pivot is when they do a rate hike, another rate hike, another rate hike, and then they lower the rate. That's a Fed pivot. So you've got 3 different options here for the Fed. A Fed slowdown, a Fed pause, and a Fed pivot. What the article suggested was a Fed slowdown on Friday, and that's why the probabilities on the Fed Watch tool changed for the December meeting. Okay? And that is also what helped to kick off as like a spark for the rally on Friday that carried over to today. But it is getting a little stretched right now. All right? There was also for today a very weak preliminary manufacturing and services PMI data for October. And that helped to support this thinking about the Fed slowdown. Now, many stocks came along for the rally, which left 9 of the 11 S&P 500 sectors in positive territory. So let me just pull those up here on the right side of the screen here for you so you can see that. Let me lower it down to get them all in there. All right. There they are. And you can see there were two, one in negative territory, materials, one kind of flat, which was real estate and REITs, basically flat. But healthcare, XLV, that was up 1.9%, and it held the top spot. And like I already said, materials, XLB, which lost 0.6%, fell to the bottom of the list. All the rest in green. One notable area of weakness, though, was Chinese stocks and U.S. stocks with high exposure to the Chinese market. This comes after Xi Jinping secured an unprecedented third 5-year term to serve as China's leader. Now, that wasn't surprising. But what was surprising is that it did come as I guess I should say, a shock to many investors that he managed to surround himself with only loyalists who are apt to help him pursue tighter regulations, which means watch out Taiwan, and the continuation of of China's zero COVID policy. Now, we could see that in companies like JD.com, ticker symbol JD, which was down 13% on the day. There were many companies, Chinese related, that got hit hard today. Now, it is up 0.5% in after hours. That's a bonus. And then another one, and I Swanee, I am not that great on the pronunciation of this. I believe it is Penduo. Maybe. Bear with me on that one. But the ticker symbol is PDD, P and a double D. This stock, which is a Chinese stock, Chinese company, it fell nearly 25% on the day. A big drop. Now, that's just two examples of losing standouts for Chinese stocks. And then companies that are heavily reliant on China for its business, Las Vegas Sands is one. Ticker symbol is LVS. They lost 10.3% today. Another one that many of you probably know and have used before, Starbucks. Ticker symbol SBUX. They were down 5.5% today. So there were other companies who do have business in China that suffered losses today related to Xi's power grab. That's what it was in China. It was a power grab. Now, let's switch gears here to the energy complex. XLE. It was up 0.4%, 0.47, maybe call it 0.5%. It's still showing relative strength. Although energy complex futures did settle mixed. All right. Now, if you see here, the two purple lines representing the weekly expected move, that is not the updated weekly expected move for this week. I do not update the sectors until Wednesday because I give the weekly expected moves out to our private investor community on Sunday evening. So they have it. They have a few days with it, and they can use that to their advantage when they are trading. All right, let's look at a huge component to energy, oil. Just type in U.S. oil in TradingView, no spaces, and you'll get the WTI crude oil futures. Now, it fell 0.3% today to $84.64 a barrel. While natural gas futures rose 5.2%. It's like they swapped places from Friday. But you can see here, we're starting to maybe base out here for oil. Let me put a trend line here. Probably right here, about 82 being the the bottom there, and let's change that to blue since it is a supporting trend line. We are at 84.9 right now, well above it. We are still under that 50-day moving average, but that 50-day moving average is starting to straighten out, level out. So it's not really declining anymore. RSI is kind of like in the middle. So oil could go either way where it's sitting at right now. All right. Economic data today was limited to the preliminary October IHS market manufacturing PMI, which came in at a 49.9 versus the prior reading of 52. In the preliminary October IHS market services PMI came in at 46.6 versus the prior reading of 49.3. A number under 50 shows contraction. So today's numbers gave us a clear indication that services and now manufacturing are both contracting, slowing down. They are no longer growing. And we know this. We know the economy is slowing. Now, tomorrow, General Motors, Valero Energy, UPS, Sherwin-Williams, General Electric, Raytheon, Biogen, Coca-Cola, 3M. They all headline earnings before the market opens. There's just too many to name, but that's just a few. Now, looking ahead to tomorrow as well, market participants will receive the following economic data. 9 a.m., the August FHFA Housing Price Index. The expectation is a negative 0.7. The prior reading was a negative 0.6. We also get the August S&P Case-Shiller Home Price Index. The expectation is 14%. The prior reading was 16.1%. Not looking good for the housing market. Then at 10 o'clock Eastern, the October Consumer Confidence. Expectation is 105.5. Prior reading was 108. Now, let's go over the most important part for tomorrow. We have the expected move for tomorrow and the weekly expected move as well. All right. Let me open this up just a little bit. Spread it out some. Bring you up. Okay. So this yellow shaded box right here, okay? This is showing you what tomorrow could bring for the SPX, which is the S&P 500. And I'll look at the SPY, the Qs, and the IWM in that order next. Right now, the weekly expected move on the upper end is 38.66. The weekly expected move on the lower end is 36.39. Tomorrow, as your potential risk, there is a expected move with a high of 38.39, which is right here, and a low of 35.37, which is right there. There is a 1.1% upside to a 6.84% downside. So there is a greater downside risk for the SPX tomorrow than there is for upside. That's not a very good risk-reward ratio right there. And as this rally continues to move up, if it does tomorrow, I think it could stall tomorrow, okay? There's a good likelihood it could stall out. Those percentages, a 1.1% potential upside to a 6.8% potential downside, that's pretty big risk. That's for the SPX. And you'll find that it is very similar as we continue to move here, okay? All right, let's go to the SPY and let's do the same thing. All right, we're going to start with the weekly expected move, and I'll give you the risk range for tomorrow. It's got to load here. Come on, let's go. There we go. Okay, the weekly expected move on the top side is 385. The weekly expected move on the bottom is 362. Now, the risk for tomorrow, just tomorrow, the high is 382. The low is 352. There is a 1.05% upside to a 6.88% downside. Again, not a very good risk-reward setup there for the SPY. This shows me we have a greater potential to stall tomorrow than to continue with this rally. All right? Okay, let's clean this up and then go to the Qs. This is something I'm going to add to our daily live streams because this is very, very important information if you're trading in any of these index products, to know this for the day coming up. Now, for the Q, the weekly expected move on the top side is 286. The weekly expected move on the bottom side is 264. Now, tomorrow, we have top side potential of 384, okay? And we have a bottom side potential of 256. Now, notice that's well below the weekly expected move. So, with this, we have a 2.08% upside to a 7.8% downside. Again, not a good risk-reward setup to go long in this particular place at this particular time, okay? So again, the likelihood of stalling is greater on the SPY, but it is still there on the Qs. All right, let's go on to the IWM, and then we'll wrap this up or take your questions. All right, for the IWM, and I already showed you for the dollar what to expect for tomorrow as well, what that risk range is. All right, lines load for me. Let's go. Don't fail me now. Okay, for the IWM, which is your small caps, the weekly expected move on the upside is 178. The weekly expected move on the downside is 166. Remember, there's a 68% probability by the end of the week, Friday, at the close of the market, that the IWM and all of these other indices that I've showed you will be within those two purple lines. It is one of the clearest and most efficient numbers in the entire market. Now, tomorrow for the IWM, on the top side, we've got 176. On the bottom side, we've got 165. And again, this is also below the weekly expected move, just like for the Qs. Now, for the IWM, we have a 1.68% upside to a 4.83% downside. Again, not real good risk reward there, but at least it is better than the SPY or the Q. Okay? And another thing to point out about the IWM today is we've got a hammer candle that has formed. This is typically when reversals take place. Okay, so we need to be careful here. We need to be real careful here. All right, so that's everything on my notes. Before we wrap up this live stream, though, if you have questions, now's a great time to ask them, by the way. If you could do me a favor and click the like button, share this video with a friend, and if you like the perspective, you want more, you want to get instant access to our weekly expected moves, our trade setups, the whole shebang, even our weekly momentum stocks, which will be coming out tomorrow after analyzing today, just click the first link in the description. It's really that simple. Also, a private Discord. I would love to see you there. Absolutely. All right, ladies and gentlemen. Well, this will wrap it up for today. I greatly appreciate you joining me today. And yeah, let's see what we can do tomorrow. I'll be back here after the market has closed to talk about what happened, why it happened, and what to expect going forward. So hopefully these zones here, they helped you out tremendously with your trading tomorrow. We'll talk about it, and you can let me know how it worked out for you. All right. Thank you, ladies and gentlemen, for joining me. I greatly appreciate each and every one of you. And I'll see you in the next video. Take care.